Hello and welcome to the week ahead video with me, David Madden. Now before taking a look at the major events of next week, let's take a moment to quickly recap the major events of the week just gone. Looking here at the US30, we saw a very bullish run on global stock markets. Earlier this week, the US30 went on to hit its highest level since April, which really underlines how bullish the recent upward trend has been. But since then, we have seen a bit of a retreat. The bullish sentiment faded a little, and on top of that we had some hawkish comments from Mary Daly of the Federal Reserve, and that put a bit of pressure on the US30. Now, looking ahead to next week, on Thursday, Friday, Saturday, we have the Jackson Hole Symposium. This is going to be the most closely watched event of the week. This could be an opportunity for the Federal Reserve to signal what they're going to do next in terms of their current monetary policy. That the Fed already hiked interest rates by 75 basis points in June and in July. The speculation we could have another large rate hike in September. The Jackson Hole Symposium could be an opportunity for the Federal Reserve to kind of give an indication of, are they going to continue down the route of carrying out large interest rate hikes, or are they looking to actually scale back the size of rate hikes. So whatever we see out of the Jackson Hole Symposium, that could see increased volatility in US stocks and stock markets around the world. On Thursday, we have the preliminary reading of US second quarter GDP. Keep in mind the advanced reading showed a contraction of 0.9% and in the second quarter, and in the first quarter the economy shrank by 1.6%. And the definition of a technical recession is 2 consecutive quarters of negative growth. So the US is technically in a technical recession. Once again, the US GDP number on Thursday could inject volatility to the US30 and other stock markets. Looking at the price action of the US30 recently, as I said a few minutes ago, the market hit a multi-month high earlier on this week, but it has drifted a little lower. Even though it has pulled back a small bit, it's still holding above these 3 simple moving averages. And while it continues to hold above these 3 simple moving averages, it's likely the more medium-term upward trend will continue. Further gains from here could see a target 34,506, and a break beyond that could see a target at 34,726. If you take a look at the price action in the last few days, we can see the market's been edging lower. Looking at the RSI, it's moving lower as well, indicating the price bias is to the downside. If we do see a continuation of this downward move in the US30, it could look to retest this zone here at 33,682, and a break below that could see a target 33,516. Also next week, on Tuesday, we have the various PMI services and manufacturing flash reports from the UK, the Eurozone and the US. And broadly speaking, manufacturing services in all 3 of those regions have been in decline as the post-pandemic boom is over, and things are growing, broadly speaking, growing, but at a slower pace. But some reports are a bit more concerning than others. Focusing in on the Eurozone numbers, the Eurozone manufacturing recently fell to its lowest level in over 2 years, and the service sector in the Eurozone is growing, but it's growing at its slowest pace in 15 months. So there's probably most focus is going to be on the Eurozone manufacturing and service PMI reports coming out on Tuesday. Looking here at Euro-Dollar, the currency appears moving sharply lower recently, particularly in the past 24 hours after the hawkish comments from Fed member Daly. The currency pair has fallen to its lowest level since mid-July, so we're talking about a 1-month low being registered on Euro-Dollar, which really highlights how bearish the recent downward trend has been. If we continue to hold below these 3 simple moving averages, it's likely the medium-term downward trend will continue. Further losses from here could see a target 1.0006, and a break below that could see a target 0.9951. If you look at the RSI, we can see it's moving lower. In fact, it's moved into oversold territory. So this could be an early warning sign that the recent downward move in price has become overstretched. If you do see a snapback in Euro-Dollar from here, it might encounter resistance at 1.0251, and a break beyond that could see a target 1.0324. That's all from me from this video. Thank you very much.